90% of professional fund managers and investors could not be the S&P 500 over the last 15 years. Think about that. These are people whose whole job is to analyze financial statements, to look into these companies, to try to beat the market. They have teams of analysis, they have expensive software, they have more information than the average investor has, and yet 90% of them underperformed a simple S&P 500 index. That's why many investors, including people like myself, choose low-cost, broad-based ETFs instead of just trying to pick individual stocks. So if you're looking to get into investing, here are two of the most popular ETFs that investors start with. VOO, this is just tracking the S&P 500. So you're going to beat out 90% of investors. And another one that people like is QQQ. This one focuses on a lot of the larger tech companies, which is nice when you're trying to get into that space as well. These ETFs gives you exposure to many of these huge companies instead of just trying to bet on one. And instead of trying to beat the market, the goal is to own the market. Drop your favorite ETFs in the comments below.